Good morning, welcome to this update on Friday the 15th of July, brought to you by Phoenix Blue. I'm Tom Colley and I'll take you through the news in the markets this morning. And it's the news where we'll start. Big news yesterday was the bank rate for the Bank of England. The market was anticipating a reduction from the long-term rate of 0.5% down to 0.25% on the basis of the recent Brexit referendum result. However, the Bank of England chose to hold rates at the current 0.5% level, and the voting for that was 8 in favour of doing that and 1 against. In terms of the other actions they might take that we could encompass in the term quantitative easing, the votes were 9-0 in favour of not employing them at this moment in time. The argument being is there isn't sufficient data following the Brexit vote in order to make a valid decision. We'll have a look at the what that did on the pound chart in a little while. We also had out PPI and unemployment claims from the States at 1:30. Both came in nice figures, particularly the PPI. However, the dollar has been very inactive this week, or really for the last 2 weeks. And again, we'll look at that in a minute. Overnight, we've had from China, we've had GDP figures and industrial production figures, which we will take with caution, bearing in mind the government-produced figures are not always trusted. Going forward, today, 1 o'clock, Mark Carney speaks, the Governor at the Bank of England. Be aware of this. It may be significant, it may not. He's actually speaking in Toronto, Canada. He is Canadian, and he's talking, the conference he's talking at is predominantly about the economy / climate change. So we may see something, or it may be totally nothing to do with something that we would be interested in. But we just need to be aware of that. It's Friday afternoon anyway. We're always cautious on a Friday, profit taking, reduced liquidity in the market, etc., etc. Just after that, we will see manufacturing sales from Canadian dollar, and then from the US, CPI, core CPI, retail sales, and then consumer sentiment. So those are all quite significant for the dollar. It'd be interesting to see if they have any effect on the US dollar or the dollar index, simply because we just haven't been seeing any activity out of the dollar in the last couple of weeks, as I've already said. Okay, over in the Far East, the Shanghai Composite, the composite of the Chinese stock exchanges, well, we've had a third straight bullish week. We've broken above, and if you look at a daily chart, it looks like we've retested overnight this support level at 3045. Next significant level on this weekly chart is going to be 3400. So we're seeing a bullish play there. It's been going for quite a lot longer than the bullish markets we've seen in Europe and the US and the S&P and what have you. Again, we'll have a quick look at the S&P in a moment. Over on the dollar one exchange rate, well, this horizontal line here is the highest daily close we've had in this time frame, this period. The chart's weekly, but that's a daily close. We can see what we've had is we've had a bullish move, but that's a devaluation in the Chinese yuan. We've subsequently retested that daily close level, and we'll be watching this, as I've said on a number of occasions, because these big devaluation moves here have led to big sell-offs in equities markets around the world. Now, in contrast to that, here we've got the Nikkei. We've had a very, very bullish week. This is the daily chart, but we had particularly Monday and Tuesday extremely bullish following an election win. It was a slightly not the actual government, but the equivalent of the UK House of Lords, I believe, is the nearest way I can think of saying that, in favour of the existing Prime Minister Abe. His policy has been really to take extreme measures to devalue the Japanese yen and stimulate inflation in the economy. When we see a weakening of the yen, which we'll see in a second, we'll see a strengthening of the Nikkei, the Japanese equities, because they see a weaker yen as good for their business, which is predominantly export. Here is the yen. Bear in mind this is US dollar JPY, so it's inverted. So dollar weakness is up, yen weakness is up, yen strength is down. We're in a channel here at the moment. We're approaching a significant level here. Looks like 106.75 for a round figure and the top of this channel. We're looking for a break and retest of this to take this market higher. On the basis of the election and what's been said, there's a big expectation of some significant additional easing measures, and we see price certainly in the medium term back at 120s, and even see possibilities of 140s if this really takes hold. We've mentioned the dollar index already. This is the last 2 weeks. Last week we tested 95.30, this level of support here. This week we've been testing $96 again. This market is, for me, is relatively inactive until we get a break above 97 or a break below 95.30. Unusually, the dollar has had a very limited influence in the market today. This week, it's been driven by the yen devaluation and a risk on sentiment, with money running to the equities markets and away from safe havens. Here's the pound. Well, yesterday we had the announcement that the bank rate wouldn't change. Price had risen on expectation of that, and when the announcement came out, obviously there was a really sharp pullback. But what we have seen subsequently overnight is another bullish period. This level here at 1.35 is really very significant. The reason being is that was the 2008 crash lows. So any break above that, I'm sure, will be seen as positive, and we'll be looking for a break above that to potentially look at short-term trades long on the pound. This is the weekly chart of the pound here. I just thought this was interesting to take a stand-back view on what happened in the Brexit vote. What we can see, we've got the pound moving in a downward channel. This is August 2014. This period here is the election where the Conservatives got a majority government, and we saw some strengthening on the pound on the basis that that would mean decision making would be more definitive. But at the same time, just through this period here, we effectively created a market top when the Conservative government announced that they would be having the Brexit referendum. Obviously, then we saw the Brexit referendum, and we're back to here. We saw expectation of a stay-in vote, which took price right up, bang on to this 1.5, obviously a hugely significant level. But then the surprising result occurred, and bang, there we went, that huge move there. Would have been like to be in that, but we don't actually trade news events here at Phoenix Blue. So we were out of the market because that was unpredictable. And if we had got it, it would have been pure luck, not based on sound reasoning and probability that we usually use. As I said, now we're down around this level here at 1.35. That's significant, having made record 35-year lows down at the 1.28 level here. One market we are in at the moment and are actively trading is the New Zealand dollar. We took trades from the highs here. We've got money off the table, or stops at break even, well in profit. We've now got a level here at 7150. We're looking for that to break, close below over the weekend for a retest to take this market shorter. Similarly, we said we had a risk-on scenario. It took quite a long time for gold to pick up on this. Immediately post the Brexit vote, the safe havens were not acting in a risk-on manner, even though equities were rallying strongly. Having said that, with the announcement of the move on the yen, the announcement of the election results in Japan, combined with anticipation of further easing rate reductions in the UK, we've seen this risk-on pullback, which we've been waiting for. Our commitment of traders analysis says that this is potentially at a market top, meaning the market does need a pullback and a break, although our longer term bias is on a long bias. So yeah, we're short that. We're looking for another opportunity to get in here. Our immediate target is just above 1300 here, simply because we don't know how big the pullback will be. If we get a break below there, we'll be looking for a move down towards 1250 stroke this trend line here. The risk-on scenario, here's the S&P, extremely bullish. This is the previous all-time high. This is what's happened this week. We've broken clearly above it. We've had continuous closes above it. And we're in on new territory in terms of price on that. We're seeing bullish equities markets. We've already looked at the Nikkei, but if you were to look in the European and the UK equities markets, you'll see they're very much bullish at the same time. We're also currently focused in commodities markets. I'm not going to show you those today, but we're short soybeans, long wheat, and looking to get short in corn again, where we had a really good trade over the previous 2 weeks. Now, the way we do that is predominantly using commitment of traders analysis and seasonal analysis. Now we're going to put together a morning update which is a little bit more explanatory about exactly what the commitment of traders report is and how in principle we use it, so that new guys or new members who haven't been actually on board with us at Phoenix Blue can see how they can come and work with us and take advantage of that, along with all the other assets that we offer as well. Now, if you are interested in that, next week, it's very short term now, but on the 19th of July, there's an opportunity for 4 hours free trading on Tuesday afternoon in London. If you are interested in that, if you want to learn about what we do, absolutely free of charge, no commitment, email us at info@phoenixblue or visit the website and do the same. Okay, if you've got any questions about this specific video, I'm on tom@phoenixblue.co.uk, but all that remains is to wish you a happy trading day and enjoy your weekend, and we'll be back with you on Monday. Take care.